Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, yesterday was a very whipsaw price action. First of all, the Australian dollar bulls were ambushed from the bearish camp, which is around from where I located from this previous rejection at 76.1530, as you can see from that long wick. The bullish confidence returned following the RBA's statement on monetary policy. At its meeting on Tuesday, the RBA kept its official cash rate at 0.1 as widely expected. However, the central bank also said from early September it would buy longer-term government bonds at a marginally lower rate of around 4 billion a week until at least mid-November. Also, the RBA reiterated its position that it will not raise the cash rate until 2024, as it does not see inflation rising to 2%, 3% until then. However, Governor Phil Lowe was quite hawkish as he said that the condition for an increase in cash rate depends upon the data, not the date, adding that policymakers expect inflation to just reach 2% by mid-2023. Also sticking to the 2024 forecast for the first rate hike. Now looking at the price action, we can see here, as I mentioned, the long wick from the rejection close to that 76 handle has now put a slightly negative sentiment due to the RSI breaking back beneath the midway point. Overall, though, it was just yesterday I pointed out that the bears could push the market from this area, and it did exactly that. And with the dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounding very sharply off 92 handle, has put some of the markets in a bit of a position, and you'll see as we go through some of these charts. So at present, the call is to 74.70 from the rejection, that is, due to that rejection, and may see a further decline to 74.20 and reassess from there. So with the euro weighted at 57.6 to the US dollar, you can see that the bearish outside range day has negated this hammer and therefore put back in focus to the downside of 117.50, which was the initial call. With an ADX trending to a bear case and also this RSI still holding to this downtrend, could eventually see that target reached. This on the flip side would see the US dollar index rally on to 93 as it's around 92.40 presently. The call for dollar yen is getting very close to this uptrend channel. Now, like the top side being broken, I anticipated the bottom side also to be broken with heavy indicators, that is to a negative signal with the MACD married up to the RSI, could see not the support level of 110.40 holding, but maybe down towards 109.60-70 before profit taking comes back into play. So somewhere around this region is where all these tops and this previous hammer was posted. Keep an eye on the indicator though, as it may strengthen and may not hold around this 60-70 level. However, one step at a time, into the fourth consecutive bear candle. Let's see if the market continues to slide further. The pound also posted a bearish outside range day, negating the bullish outside range day, and therefore could see another down challenge to the recent lows around 137.40-45 and reassess from there. Indicator is a little bit on the uncertainty due to this recent rise in the MACD, but due to the heavy sell-off last night, and the fact is that we buckled and went underneath the midway point, does keep to a slightly negative bias. And with the pound leg buckling, a strong bearish outside range day came through on sterling yen, and now nearly claims its target of 152 figure 10. If it doesn't hold there, and this pattern continues as the ADX is starting to trend to a bear case, and both these indicators are married up to a negative, could see a target of 150.70-75 and reassess. Well, gold took the challenge to the upside, broke through 1,800 figure 6 and posted a high of 1,814 before backing down rather sharply to 1,790. Now, keep an eye on this pattern, because if we close under 1,786, which is still about 14 points away, could negate the upside target around, I'm calling it at the moment, at around 33 to 35. Well, I've outlined here. However, the close under 1,786 reinstates the downside to 1,760. It was highlighted there was some divergence here in when it comes to oil as the market was rising. You can see here that the indicator was clearly declining and therefore eventually snapped to the downside and posting a very large outside or key reversal. More to the point, key reversals are a stronger signal to a bearish or engulfing candle, and therefore should see further weakness. And they're looking down towards the region of 69.5 to 70.20 as a potential target. So somewhere down around this region, and reassess from there. It's not often that you see key reversals. They are rare, and from this one, and given from the divergence, puts the bearish sentiment in motion to the downside. I would like to see a close under 72.25, so it's still a little bit of a way to go, but I would say given from these indications and along with the signals as well, supports the bear case. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.